Welcome to the Let's Talk Crypto podcast, where we discuss the latest Bitcoin, blockchain, and digital asset news.
Hey everybody, hope you're all well. Welcome to Let's Talk Crypto, episode 15. Today I'm joined with Slava, just the two of us. We're just going to have a fireside chat about general Bitcoin and crypto related topics. And just before the show, Slava started telling me a story about sending money from a wallet, and perhaps we can start off there. Slava, why don't you share the story that you started telling me?
Hi everyone. It's been a very exciting week in the blockchain and cryptocurrency. We've seen a very high levels of volatility for Bitcoin and the rest of the cryptocurrencies. And so, as the markets were climbing up several days ago, obviously many people anticipated that the market is going to undergo a correction at one point. And the story is very interesting, and it's kind of like practical because I keep most of my cryptocurrency in a cold storage. And so I felt that it's important to put it on an exchange so that when the time comes and the market starts, the correction starts happening, I can easily hedge my risks by exiting into a stable coin or some other form of asset that is not going to be prone to drops. And I went to my wallet. I signed in. I entered. It was really late. I entered the amount. I entered the transaction fee. And that wallet gives you three options when it comes to transaction fee. As our readers might know, the transaction fee is an incentive for miners to include the transaction to the block. And the higher the fee, the more chances your transaction gets to be added to the block. So because I was in a rush, as actually at that point, the markets already started experiencing the correction, I entered the premium transaction fee.
Was it intentional that you selected the highest fee, or was that accidental because you were in a rush, or what was your thinking there?
It was absolutely intentional thing. And as I mentioned, the reason why I wanted the money from my wallet on my exchange account as soon as possible, because I'm looking at the screen and I'm seeing the corrections starting to happen. So the prices drop. So obviously I want to manage my risks and exit into a stable coin. And so that transaction fee was about $1.5 as far as I can recall. A few hours later, it was already something like 2 a.m., 3 a.m. in the morning. The transaction is stuck. And that is something wrong, because typically if the transaction for that wallet takes about 60 minutes, maximum 60 minutes, transfer funds from one account to another. So I start digging and I'm really confused as to what is happening and why did the transaction not end up on the exchange. I check everything and everything matches. So I start getting worried because it was a very relatively large transaction. And so I go on the internet and I search statistics data on the transaction fee. And so I find this really cool website. We can share it later. I don't remember it off the top of my head, which shows that basically the transaction fee for that specific point was about the average transaction fee was about $3, which is twice as much as what I selected. And so to kind of give the short version of the story, it took about close to 3 days for the transaction to go through. I also learned a lot from that experience. I mean, the first takeaway is that I always trust technology. Technology can fail, because what I believe happened is that the transaction fee schedule on that specific wallet where I held my crypto was not updated on time. So the presented transaction fee was much, much lower than the market rate. So when when you are going to money in a rush, or you want to make sure that it's time sensitive transaction, you definitely want to go to the internet and make sure that the transaction is there. actual and valid and are
Just one thing I'd like to point out there for people listening. You said that, technology can fail. Let's be clear, the technology of Bitcoin didn't fail, but perhaps the intermediary layer, which would be the wallet itself, that technology, which interacts with the Bitcoin blockchain, in that particular instance failed or didn't give good information.
That's absolutely correct. Because eventually my transaction got to the address, to the deposit address. It's just that I wasn't given accurate information by centralized technology. And so that has nothing to do with Bitcoin. So yeah, the first takeaway is that if you're under pressure or have a time-sensitive transaction, make sure you double check and validate the transaction fee on the internet. We can add the link to the website that I used to the description. I've also looked and researched methods of how to accelerate the transaction. I will be honest, there's several ways of doing that, technical and non-technical. There's a number of websites that allow you to accelerate the transaction. What they claim is that they resubmit your transaction to a number of nodes. In order to do that, you have to provide hash function, which is basically an ID of the transaction. I did not understand how it works technically because I don't see the connection. What difference would it make to potential node validators, block validators, if the transaction is being resubmitted once again to them? So I did not use that method, but there are other technically more advanced methods which can help you to reclaim the funds or accelerate the transaction. So one of those methods is when you send the money with a higher transaction to the same address. That was not an option for me, unfortunately, because I didn't have any more funds, but it's something I should definitely explore and test to make sure that I have the ownership of my funds and can manage them more effectively next time.
Yes, sure. I mean, I think the thing that you're referring to is called RBF, replaced by fee, where you can resubmit the transaction with a higher fee, and it will take precedence over the other transaction. And the one where you submit the transaction ID, I believe, is where they manage to submit it to a mining node and get the node the miner to include it in the next transaction block. If they, to try and include it into the next transaction block. I remember during the 2017 SegWit big block war between the two different camps, one of the things that was happening at the time was the fees were going very high, and some of the miners, I can't remember the name exactly, but one of the miners out of China was offering a service where they actually put a page on their website and basically offered to push transactions through, urgent ones through for a fee or something related to that. I can't remember the exact mechanics of it, but yeah, that's what was happening. Not exactly the best user experience for the average person out there, I must say, and it does show how early we are in this whole adoption cycle, how early this technology is. I mean, you can imagine people already being sort of put off by many of the different things they have to learn or pick up when using cryptocurrency or Bitcoin. I mean, it must be quite daunting. And then, can you imagine them experiencing something like what you went through? Look, I'm sure you were very calm and you knew that, look, everything will be all right. It still probably weighed on you a little bit that you wanted to get it done because it was time sensitive. But a new person who's using Bitcoin, which is already an intangible sort of type of thing, experiencing something like that would be quite scary. And thankfully, since SegWit adoption, we haven't really had this problem, but I suppose with this big bull run that we're going through at the moment, there's probably a lot more on-chain transactions taking place as a sign of people just like you moving money on and off exchanges, taking profit, or going to to move money to the exchange so that they can leverage trade or whatever. Maybe there's arbitrage opportunities. You'll probably find a lot of miners moving money onto exchanges to liquidate positions, to pay the bills. But, the point being that we're back to that sort of level of activity again on chain. And it is very interesting that you've actually got, a real world experience with it. And you've experienced what it would feel like for somebody trying to move value and just being left hanging out to dry, Try and explain that to somebody who's new, that it's not the technology, it's not Bitcoin. It is, but, it was the wallet that set the wrong fee.
Right. Yeah, the market has certainly woken up, and we see this huge, massive volatility that is taking place. It's definitely good, but as one thing to keep in mind is that when we had the previous bull run up to 20,000, the transaction fees were like the transaction fee also increased quite substantially, and the number of transactions has increased a lot. Correct me if I'm wrong, Wes. I believe that the highest the transaction fee got for Bitcoin is around actually $20, which is quite a lot comparing to what it is right now. I
did one transaction where I moved quite a few Bitcoins, and I paid $300 in transaction fees.
Oh, wow.
Silence. Yeah, I couldn't believe it, but it was mic drop. It was a super important transaction, and that's what it cost. But also remember, the value of Bitcoin when I was doing that transaction was $19,400 or something, and we're paying per byte. That's how the transaction fees are calculated. So if the value of Bitcoin is higher, the fees are going to be higher too. It makes sense, doesn't it?
Mm-hmm. It does. One thing to our listeners, I think it's important to actually tell one great thing about the Bitcoin, even though, as we mentioned in the previous podcast, one of the previous podcasts, that the transaction fees for the Bitcoin blockchain, the transactions per second are not as high as comparing, let's say, to Visa or MasterCard. At the same time, the volume that goes through the network is there. At some points, it could be compared to Visa and MasterCard. But as you mentioned, you pay per byte, per amount of information and data, rather than per volume. So one transaction, just recently I read that a single transaction contained something like 2 billion worth of Bitcoins. I don't know if you read or if you've seen that.
Yes, but I did see it, but there was one very recently that was $4 billion US dollars.
Yeah. And so, for me, I don't know anyone off the top of my head who is claiming that Bitcoin is a substitute for cash. When we talk about Bitcoin and Bitcoin blockchain, we think of it more as a gold and a store of value. And it is certainly much more liquid than gold, because there's no way you can send the money to another side of the world, gold to another side of the world in like 1 day, 1 hour. And that is certainly possible with Bitcoin, transferring value much, much faster at a much lower rate and more securely than if you were to, for example, hold and ship physical gold.
Yeah, no, true. In that run-up in 2017, I did a lot of Bitcoin transactions. For business purposes, for trading purposes, for friends, for business associates, and I was moving quite a lot of value around, back and forth to paying suppliers and all sorts of things related to business activities. And it's quite funny how desensitized I became to the values that I was moving around. I would literally copy, paste an address, send, set the fee, send, without hardly hesitating, and the amounts that I was sending were quite large amounts, and I just had trust that it worked. I knew that I had the correct address, I'd inputted the correct information. If it was a larger amount and I was transferring it to a person for the first time, we would do a smaller transaction first, and if they received it, confirmed it, then we would do the big transaction. But it was quite natural, and it just worked out. I felt confident. I didn't have any doubts. I wasn't worried that this money was going to go into into the atmosphere and disappear and not arrive at its destination. And that trust, that sense of not worrying about it, that the system will work as long as you don't make any errors, the system will work, the money will arrive at its destination. As long as the wallet has got the correct fee or you've chosen the correct fee, that trust is there with Bitcoin. And I must say, when I had to do some transfers in Ethereum and that, I took a little bit longer. I actually did think I slowed right down, double checked, triple checked, looked at everything, and was just a little bit more nervous about doing the transactions. Not to say that it didn't work out. Everything worked out fine, but there was just this reliability factor of Bitcoin, that I think put me at ease. And I think that's it. With the store of value, sort of a property of Bitcoin, that's what you get. You get this sense of trust, reliability, perhaps not stable because it's volatile at the moment, but it's got very similar properties where you can sort of rely on it. It's going to work. It's going to be there when you need it.
It is very interesting. Speaking of trust and reliability, I just before we started this podcast, I was listening to news and I heard that Microsoft is going to use Bitcoin blockchain to add security feature to their services. Over a year ago, I was talking to a friend of mine who's running a blockchain development agency. I'm actually planning to do some project together. And he told me that his agency has been using a Bitcoin blockchain for the last year and a half to sign contracts. So what they would do, they would take the scripting language and create a hash of the document and put it on the Bitcoin blockchain, and it's going to be there forever. And so it's just really nice to see that giants like Microsoft are joining the game, and they're also going to use that functionality, the security, and the value that Bitcoin blockchain provides beyond the store of value.
Absolutely. I mean, store of value first, and reliability and trust, and then everything else can be built on top of it. Because if that base layer isn't reliable, trustworthy, then how can you build further layers upon it, or further use cases or further applications on top? You can imagine that an app builder wants to do something like you just mentioned, where they digest a document into a hash and then they put it into the blockchain. So they build an app around it that perhaps banks can use, and banks can keep all their contracts verified on the Bitcoin blockchain. Now, what good would it be if you've got this app that is wonderful and this guy goes out and sells it to all these banks to use, if the underlying technology itself has got, let's just say, even a 10% chance of not being up, downtime, how would that work? Can you imagine? The whatever's built on top of that underlying technology suddenly is at the whim or the mercy of the reliability of that underlying system. I like to think of it like this: the internet. We've got Facebook, we've got Twitter, we've got all these different applications. Uber. Soon, perhaps even driverless cars will be using the internet. Now, what good would it be if the internet every day cut off for an hour, or was just unstable? Every week maybe it goes off for one day. It wouldn't put much confidence into the people who are going to develop and build and provide services and applications on that system. And that's what Bitcoin, I believe, is trying to build, and why it's keeping the functionality on the base layer to a minimum for security, for reliability, to be trustworthy, so that the risks and the other sort of more adventurous type of applications and use cases can be built upon this layer.
Absolutely. And I do remember that Facebook, being a massive technology corporation, not so long ago had blackouts where people in certain parts of the world could not access the network. And this is actually a very interesting question from the research standpoint. Bitcoin has been on the market for roughly 10 years. Can we claim, is it fair to claim that Bitcoin blockchain is the most reliable
network
infrastructure, network technology on the planet Earth? Because I'm just thinking about it right now because if we can actually deduct, have the specific data points that proves that, that um, assertion to be true, then it's certainly a really, really great way to for newcomers to start learning about the technology and blockchain and how it compares to a more traditional set of instruments out there.
Absolutely. I couldn't agree more. And I think that what you're seeing now is with what you mentioned, like Microsoft and these other companies coming out saying, look, we're building using the Bitcoin blockchain, or now they're using something else with Ethereum. I think that that's a sign that they do recognize this reliability that you mentioned, that it's perhaps the most reliable or the longest running sort of network, the highest uptime type of thing. And I think we're going to see more of that as time goes by. And I really honestly believe that behind the scenes, unbeknownst to us right now, there are some other big players that will be building other applications and leveraging the Bitcoin blockchain and Ethereum and some of the other open source, decentralized blockchains for whatever purpose that their business activity is. I think that everybody's been through a bit of a tough bear market right now, but behind the scenes, there's been a lot of building going on, a lot of developing, and I think a lot of this is going to start to come to fruition over the next 6 months to a year.
Another big, massive support would be for the whole community would be some level of acknowledgement and perhaps acceptance by regulators throughout the world, because from what I understand, this is still a very large factor that kind of constrains large investors to enter the space. Work with cryptocurrency as a asset class. From the higher financial economics perspective, it's a fact that Bitcoin is the best performing asset for the last couple of years. Even with the drop down that we've seen from 20,000 to roughly 3,000, right now it's up to 10,000. It's much better to invest in Bitcoin potentially comparing to traditional financial assets like stocks. I've been observing for the last couple of days during the recent bull run that, and this is very anecdotal, I don't have technical evidence to support this, but when Dow Jones, S&P 500 and large stocks on the US stock exchange were down and were in red, Bitcoin was going even, the Bitcoin was in green and was growing, increasing in value. And that shows a potential for investors and traders to hedge their risks by using Bitcoin. When the majority of markets is down, Bitcoin seems to have an inverse relationship to that and is increasing in value. And so, hedging risks is very important, whatever you do. And so it's very important for financial industry. And so hopefully that's going to be another function for Bitcoin, which is, hedging risks.
Yeah, totally agree. I mean, even within Bitcoin itself, it's got high volatility at the moment. The fact that all these new markets, derivative markets are being approved and coming out is also a good sign of the maturing approach to Bitcoin by regulators. I mean, the CFTC has come out and approved LedgerX now, and that's going to be quite something. That is a Bitcoin settled futures. So basically, when the trader buys the Bitcoin futures, they'll be settled in Bitcoins at the end, at expiry, which is quite a big thing. The one that the CME and the CBOE brought out were USD settled. So, we're starting to get a bit more mature here now. And when you do have these different types of tools at the institutional level, at the commercial level, it's more interesting for people to enter into these markets, because they can hedge their risks, as you say. And I'm talking internally within the Bitcoin sort of sphere, so that even if they are taking on some risk, there are ways for them to hedge it and to cap the downside, as well as for the miners.
Could you tell a little bit more to me and to our listeners what difference does it make? Well, first of all, let's have like a brief definition of what a futures is and derivatives in general, and what difference does it make whether you settle in a fiat currency, US dollar, or in cryptocurrency, in Bitcoin.
I think the first thing is with futures, it's basically, where did it come from? It was to hedge risks. So you would have like a farmer that would have a crop, and let's say it would come to maturity at a certain time of the year, and he wanted to hedge the risks in terms of the value of the price of what that crop might be worth at the time of it coming to market. So with the futures market, they have contracts, and they can sell the contracts. So it would be like me. I have got a crop of I don't know, bananas, and I want to sell it at a certain price at a future date. So I would have, there would be a contract for a specific date. The contract could expire on that date, and it would have a price. If somebody bought that contract, they would be settled at that date at that price. Now, what happens with Bitcoin is that, and this is very useful in the Bitcoin market. Sorry, I'll just go on a little bit of a tangent here, because you can imagine now the miners being like farmers. So today the price of Bitcoin is $5,000. Let's say, what's the price today? Let's actually use a real world example. Right now it's 10,600, let's say, US dollars. Perhaps Bitcoin price might only be $5,000 in a month's time or 2 months' time. I'm not being negative, just for pure example purposes here. So what the miners could do is they could go and sell contracts at the current price, whatever they're selling for. So they could actually go and sell that and hedge their downside risk, which is basically what I believe has happened now anyway with the Bitcoin miners. When the Bitcoin futures hit nearly about $14,000, at least on BitMEX, a lot of the Bitcoin miners would have looked at that and gone and sold those contracts, which means they are hedged for any downside risk going further into the year. Bitcoin price could drop down to $5,000 to $3,000 right now, and it probably wouldn't really even affect them because they've already sold those Bitcoins. So what they're producing is on spot, but they've already sold the futures contracts for 14 or 13,000 US dollars. So that's that's the type of functionality that you get out of a futures contract. Now, why is it important that we settle in the actual underlying, which would be Bitcoin itself instead of the US dollars? Well, it's because then it's closer to the actual, the market itself will be closer to the actual price, and the price discovery will be better, because you can imagine that a US dollar settled future it doesn't even really touch the Bitcoin market. They don't even buy, if you go buy some contracts on the futures market, no Bitcoins were used to back that up. It's almost a way of inflating supply. I hate to put it that way, but it's a completely separate side market, for lack of a better word, because I don't have the financial term for this, but it's a derivative, basically a derivative of it. Even though the Bitcoin futures market will be, as in the Bitcoin settled futures market will be a derivative, it is settled in Bitcoin. So a company like LedgerX will have to actually buy Bitcoin to be able to sell contracts on Bitcoin. Do you see the difference? So in other words, to satisfy the demand that they may have to sell Bitcoin contracts, okay, futures contracts, they would need to be holding those Bitcoins, the underlying. You see?
Yeah, so in other words, LedgerX has established a closer link between derivatives, which will be traded publicly and openly in the US, with the actual underlying asset Bitcoin. And so would that increase or decrease price volatility in, let's say, short term?
I mean, I don't know what the reaction will be when it goes to market, but long term, in theory, it gives all the different participants within the marketplace ways of hedging risk. So in theory, as more and more of these type of products emerge, the volatility should drop.
And just like you provided a parallel with agricultural business, the initial feature of a derivative of a futures contract or options contract was to hedge
Correct.
risks and stabilize the prices. So I see what you mean, that in the long term, it's probably going to lead to a more effective price discovery, and
Absolutely.
therefore bring the intersection, if we use economic terms, bring the intersection of demand and supply to the equilibrium price, to the true intrinsic value of whatever the asset is at that particular point in time. I do remember, if we're talking about short term, and correct me if I'm wrong, I do remember that the last mega bull run that propelled Bitcoin from $1,000 to $20,000, one of the driving factors was the acceptance of, if I recall correctly, SME futures and the creation of SME futures. And SME, for our listeners, is Chicago Mercantile Exchange, which is a regulated exchange in the US in Chicago. And so that was one of the main drivers for the Bitcoin price to skyrocket. And so we are, one of the differences between the latest bull run and what is happening right now is that while there's a lot of hype around Bitcoin and blockchain generated within the public, so a lot of people were kind of like got into that technology. Maybe they didn't understand it very well, but they certainly felt that if they buy it right now, today at, let's say, 3,000, they can sell later at a higher price and therefore gain value. I believe what is different about what's happening right now is that this motion is propelled by, the upward motion is propelled by more institutional players entering the industry and bringing the volatility and the positive kind of thinking about the technology with them. So the price goes higher.
Absolutely. And that includes, signs of products like the Ledger X getting approved. So, you can imagine that if there will be some people sitting on the sidelines and they see now the CTFC has approved this Ledger X product. They've approved, or about to approve, I don't know, the BAKT product, BAKKT. And, it comes a point where it's, are you going to be a laggard? Are you going to be the one, the last person to jump on board and benefit? Or are you going to get involved? All these different little things are getting ticked off now on the list of confidence and trustworthy and reliability. And one of the things is this, the regulators looking at Bitcoin itself with a more positive sort of light. And they definitely are. I mean, the CTFC approving Ledger X Bitcoin settled futures, that's huge. I mean, there's custody issues and all sorts of things that one has to take into account with that. I mean, Ledger X now has to hold Bitcoin. They have to hold Bitcoin. That's a big difference, from the CMEs. They don't have to hold Bitcoin. And you know yourself what the risks are with holding Bitcoin. And these companies have got shareholders, lots of stakeholders. They've got a fiduciary responsibility to have best practices. What are best practices? There's a lot of things that are going to be thought about now and that are going to be, sort of operating procedures that are going to have to be put in place. And this is really bringing Bitcoin mainstream, like in a big way. And I people might be underestimating what this really does mean. This is going to set off a cascade of events, which will lead ultimately to an approval of an ETF. And I mean, that is like the holy grail. If the ETF gets approved, then the adoption rate's going to accelerate like nothing you'd ever seen, because the demand for that underlying asset, which is Bitcoin, will just go through the roof. And it's going to, not only from a sort of a household name perspective, get known or well amongst the general public, but it's literally going to be put huge strain on the supply. And I don't think we've ever seen anything like that happen to an asset. And it could. This is the scary thing. It could happen overnight. You could wake up one morning and there it is, breaking news, ETF approved. And literally, all hell will break loose in terms of the value of Bitcoin. And it's a self-fulfilling prophecy after that. People all want to jump in after that, So it's interesting times. Things are going a little bit quicker than I anticipated. I think that in 2017, a lot of people were expecting an ETF to be approved, and I wasn't one of those people. I thought that we still had some time to go. Just reading carefully into the recommendations and the sort of problems that the SEC had with approving an ETF. I felt that it just wasn't ready yet, but I think it's coming close now, because one of the issues they did want they was to have a proper futures market, and at the time, we haven't had a proper futures market, and we've only really had the CME running for a year. That's gone smoothly, so that's another tick box. I mean, the volumes there have grown exponentially almost. I would say the volumes are rivaling some of the bigger exchanges like BitMEX at the moment, and now that's done, and now you're going to have a Bitcoin settled futures by two entities, I believe. It will be LedgerX and the BUCT. It's going to open up the realm of possibility that an ETF is around the corner.
To our listeners, an ETF is an exchange traded fund, which basically means that it's a basket of securities. So it's like buying or selling a stock, but you can create a basket that contains multiple different types of assets. So for example, it can be stock and bonds, and then you add some cryptocurrency there to hedge risks and to increase potential upside for that specific ETF. So it's a very mainstream, it's a mainstream financial instrument, which is very easily accessible to a larger population, because unlike many other types of assets, it has no commission fees, or very small commission fees, as far as I understand, associated with it. On adding to that, I remember that last year, people I worked with, we created a channel. We're waiting for SEC to release news about ETF, Bitcoin ETF being approved. And so we actually created we plugged in multiple streams of news to make sure that we were the first from actually SEC, to make sure that we were the first one to hear whether an ETF is approved or not. SEC provides RSS
Correct.
feeds for their news and press releases, and so we were closely monitoring that through Slack to make sure that we're the first ones to get the news and ride the wave. So definitely, I cannot wait as well to hear when an ETF. And it's a matter of time, right?
Yeah,
when
I mean,
ETF
unless
is going to get approved.
really cataclysmic happens, or a really bad decision is taken in some way by the SEC or the US government. I mean, I can't really see what would be stopping it. If I'm not mistaken, there's already hybrids of ETFs that are running around the world. I can't remember where, in Europe and in some other countries, and I'm pretty sure Singapore will be setting up their own, just purely based on the fact that they like to pioneer these type of things. But the point is this, that even if it isn't approved now and there's some sort of delay for whatever reason, another country is going to approve it, and there'll be almost a social pressure on the country level to keep with the times. If it's the same thing with the legalizing of cryptocurrency, or for regulators to come out with advice or at least guidance on what their stance is, you'll find that a lot of countries have already done it, and by mere fact that they've done it, the others are starting to do it, because now they're under pressure to play their hand, or to let the public know what their sort of intentions are with the whole space. And like that, with everything else to do with Bitcoin, it's kind of, this is the beauty of it, because none of the countries can control it itself. None of them can pause it or halt it or anything like that. If they are left behind, they are left behind by their own choice. So if another country is moving way faster ahead in terms of adoption, in terms of regulation, whatever it may be, they've only got themselves to blame. So they're under pressure now socially to try and keep up and not be left behind. And you do see that happening with some of the isles around the UK there, like the Isle of Man and Malta and countries like that. And you've got Singapore, you've got Hong Kong. They're all sort of competing to be the pioneers, or be the home of crypto, or the home of blockchain. And I think that's going to play a big part when it comes to some of these financial products too. And I'm pretty sure there's some products that haven't even been thought of yet because of the nature of Bitcoin and cryptocurrency. We might see some new hybrid sort of investment vehicles or products that we haven't even heard of yet. And these innovations are still yet to come, which weren't probably possible in the legacy systems. And these too they'll put pressure on other countries to innovate and get involved and ease their restrictions and have more sort of positive regulations.
As a native of Uzbekistan, I'm really proud that a country which is actually younger than me, because I'm 1 year older than Uzbekistan, has taken a very progressive stance when it comes to Bitcoin. I was recently reading a presidential decree from the last year, I believe, where Bitcoin was put in a absolutely separate category of financial assets. So it's not a stock or a bond. It has a very different, distinct definition. The second thing about it is that regarding Uzbekistan is that income, if you receive income in Bitcoin, it's not taxable. So, and the third thing is that cryptocurrency exchanges are legalized in Uzbekistan. So I think you have to have a foreign investor comes with a minimum of $500,000, and you can build an exchange here for the cryptocurrency, and it's absolutely legal. And so that sparked development. I hope it's going to be, as the industry progresses and, large investors pay attention to different jurisdictions, more kind of energy is going to be, more projects and more energy is going to be developed here. But just thinking about it, I can actually go in Uzbekistan, I can go to a store and buy or sell crypto right now.
Is it
easy?
And it's
absolutely legal.
Is it widely accessible, or is it just a few of the little pioneer shops that are doing it? So
it's accessible. It certainly is accessible. So you can pay for your phone, for your utilities with Bitcoin through that shop. It's not widely known. I just don't think it's under the radar of a lot of people right now from the practical standpoint. But I talked to the founder of that physical store that buys and sells Bitcoins, cryptocurrency. He mentioned that businesses invest money through the Bitcoin, so they spend Bitcoin. They send Bitcoin to an address of a person who's in Uzbekistan. Then he changes that amount to dollars, and then he can use that money to invest into the business. Freelancers get paid with Bitcoin, and they can go and exchange the value at any point in time to dollars or local currency. So the adoption is growing. Unfortunately, it's not as wide scale as I hope it to be. But when it comes to kind of governments take on the industry, I think it's a very progressive environment. Because, as I mentioned earlier, Bitcoin has its own legal status, and I believe they're starting to write laws for that specific status. And they're not trying, unlike in America, where they try to fit, or in many other countries where they try to feed Bitcoin into an existing regulatory framework. Here they're trying to create a separate framework for a new technology.
Wow, that's very interesting. Uzbekistan has obviously, taken the decision to try and, stay ahead and pioneer with Bitcoin and cryptocurrencies. So you can imagine that surrounding countries or countries with a similar demographic or similar sort of mindset will be eyeing that out. And if they haven't already, start making moves to do the same. It just makes sense. To stay relevant, one would need to compete. And just on the point of new type of products and that, new type of derivatives or new type of financial products, there's actually a company that's just announced that it's called Ever Markets Exchange. And what they're doing is they let people trade with traditional assets and they settle, or it's backed by Bitcoins. So I'm not quite sure exactly how it works, but it sounds like a new type of a new type of way of investing or trading. I have to research it a bit more, but that's just an example of, these new type of products that people will come out. Perhaps they'll have some sort of derivative that, we haven't thought of yet, some sort of basket of things where Bitcoin, it's all insured by Bitcoin or backed by Bitcoin. And I think we're going to see a lot of different things like that. You'll probably find insurance companies are going to end up using Bitcoin as a means of hedging their risks. Can you imagine, you've got some of the world's largest insurance companies buying up Bitcoin to hedge risk? I think there's a lot of these type of things we've got to look forward to over the coming months and years.
Yeah, another thing I didn't mention about Uzbekistan regulating Bitcoin and blockchain and cryptocurrency is that unlike in America, where you have to get money transmitter license for every state where you want to operate, in Uzbekistan, you're not required to have that license to work with cryptocurrency. What else? There's another big news which I heard recently, which kind of adds to that basket of positivity, which drives the market up.
What is that?
For the last months is that there's a company, they recently rebranded. So they wanted to create a Bitcoin debit card. Anyway, so they recently rebranded and they partnered with a US bank to issue Bitcoin-backed debit cards. It basically means you can instantaneously change Bitcoin to dollars and shop. Use your Visa. I believe it's Visa or MasterCard. I'm not quite certain.
They've gone and produced a set of cards that people can use. They can store their money in crypto and spend it in fiat on cards. But the Bucked exchange and ICE markets, I believe is going to have something like that, and it's going to help with merchant adoption, because basically you'll be able to hedge out the volatility on these cryptocurrencies. So a merchant will be able to accept payment in Bitcoin, but it be immediately hedged out against stable coins or back into fiat. So that's going to increase the places that we are able to spend crypto at.
What do you think is going to be the how's the market? So we're certainly going through the correction phase right now, with the market down to 4.1%, with the Bitcoin's price around $2,500. How long do you think the correction will be happening? And what are the options?
Okay, yeah, I mean, as you do know, nobody really knows, do they? But what we can do is we can look at the price action, and we can sort of deduce a few things, and sort of, if this then that type of scenarios can be drawn up, and if we really look at it, since the 1st of February, we've been going up on a monthly basis. Every single month is a green month. 1, 2, 3, 4, 5 months, right up to the end of June. So that is quite a long stretch of no pullbacks. On a monthly basis, we have not pulled back once. Every month we've closed higher. So that is quite a run-up. By any stretch of the imagination, you don't often see that in an asset class. Even if I go back to 2017, there was only one little stretch, 1, 2, 3, 4, 5, between the 1st of April and the end of August, where we did the same move of 5 months in a row. Other than that, there were pullback months in between, all the way back to 2013. In fact, all the way back to 2012, 2013. We haven't done that before. So there's been 3 occurrences of that. Now, April to end of August 2017, and back in 2012, 2013. So it is quite a remarkable rise, and it wouldn't be strange to have a little bit of a pullback and a cool off. It wouldn't be something unexpected, but maybe everybody's expecting that. So markets aren't that generous. Sometimes you think it's over, and then they surprise you, and they pull another one out the bag, another month. So yeah. In all honesty, if I look at the way price has been moving and that, I would say if we were going to have a little bit of a pullback, it's very likely it would be this month. We're only the 1st of July today. So it's hard to say anything immediately, but we are at a very high level and we haven't had any pullbacks. Often people at this type of level would want to take some profit, and that could cause a little bit of a pullback. But I would see it as a buying opportunity. I honestly believe that there's a very slim chance of us returning below 4,000, and any pullbacks now are more buying opportunities. Whereas obviously in 2018, during that long bear market, you would basically, people were selling the rises to get out. they missed the opportunity. The price plummeted. They waited for it to get high, and then everybody started selling again to try and get back to US dollars. And I think that is the opposite right now. I think people are hoping it's going to drop so that they could buy because they missed it. And I've got perhaps some bad news for them. I don't think it's going back to $4,000 or $3,000 anytime soon. Generally, when a market mover marks price up like it's been done, they do it in such a way that it doesn't give you time to buy at the bottom, because they don't want the price to return there. And that's what you've witnessed now. So, we have in this last bit gone up quite a lot, maybe overcooked it a little bit, which means that we can also come down quite quickly too. And I think it'll just be a great buying opportunity. I would say the levels I would watch out for are around the 10,000 mark. Although I think that if we come down there too quickly, we could probably go straight through and probably see 9.5, and not all at once. I'm not talking about one straight line down, but over a few months we could end up back at about 8.5. It's hard to really predict these things. I don't think we would go much further than that, but we'd have to see how we arrive at these different price levels, if we arrive there. If price just turns around here and keeps going up, well, it's Bitcoin for you. But certainly we have got structures of support below us on the weekly and a monthly time frame. We've got we've built up a little bit of structure, and I don't see it. There's a lot of people saying we're going to $1,000 again. As soon as the price stops moving and does a little dip, all the people come out saying, "Oh, we're going to $1,000 or $2,000 or something ridiculous like that." I just think it's impossible to actually predict that from where we are now. Different story if we find ourselves at below 5,000 again, then yes, perhaps we can start talking about 3,000 and lower levels. But we're not there now, so that's just crystal ball nonsense.
Another thing which I think is different with this bull run and Bitcoin taking the lead comparing to the previous bull run up to 20,000 is that we had a massive developing ICO market during the previous bull run. And so we saw a lot of action with altcoins. A lot of funds were invested into ICOs over similar products. And so that kind of propelled altcoins quite a lot. Whereas this time, Bitcoin is taking the lead as the main cryptocurrency on the market and is driving the growth for the rest of the market. Even with Litecoin, the Litecoin is going to go go through halving soon, and we see that it's been above Bitcoin for about 20% for some time, but right now it's below 10% relative to Bitcoin comparing to the month ago.
It makes perfect sense, and it's going to be very interesting to watch what happens now between let's just say the next couple months, because Bitcoin has left most of the other top caps and altcoins in the dust completely. This rise has been unbelievable, and generally everybody's been sitting back and saying, there's going to be an alt season now. They're calling it the alt season. When Bitcoin sort of goes sideways or hesitates or goes down, we see the alts start to rocket. And it's kind of what happened in 2017, beginning of 2018, where Bitcoin hesitated, stutter-stepped, and sort of, the altcoins just blasted up like rockets. And I think people are waiting for that. And, is it going to happen again? I don't know. It seems like a different market. It seems like there's a much less ICO sort of fever pitch sort of interest in the cryptocurrency space. Are we going to get it again? I don't know. Bitcoin had a lot of problems in 2017, and it caused a lot of people to look elsewhere. A lot of people got disheartened with the infighting in Bitcoin and the problems it was facing, and was getting attacked by Bitcoin Cash. And you remember, it was almost like a flippening. Bitcoin Cash was up at $4,000 and at one stage, and somebody was, I think it was Roger Ver, they believe, was selling all their Bitcoins and trying to crash the price of Bitcoin, and all these little incidents, led a lot of people to go looking for other opportunities. And Do we have the same thing now? I don't know. Maybe we do. Maybe it's going to be even more. I have no idea, but I do think it's going to be a different market. One thing I am very interested to see what happens with there being less ICOs, and I don't know if I'm right about this, but it definitely feels like there's less money sloshing around for ICOs or IEOs and all these things. A lot of the selling in 2018 was of these projects. Every time the price rose, like you'd have a project, just for example, I don't know if they really did it, but just for example, like Tezos, who raises like $500 million or something, whatever it was, $200 million. You can imagine them with their treasury. They've raised a lot of Bitcoin. So every time the value goes up a bit, they try and liquidate some because they've got real world bills to pay. Now, with less of that around, with less of these projects that have raised substantial amounts of money, and most of them having already cashed out, which I believe is a big cause of the capitulation type of price dumps that we had. Will we perhaps not see a bear market of that proportion or big down movements like we saw in 2018 for the foreseeable future? Maybe that we won't see that for a while because there isn't these big players that need to liquidate vast sums of Bitcoin to pay bills, for example, pay salaries.
Yes, absolutely. A lot of projects had to, actually, a lot of projects left the market, a lot of ICOs, just because they didn't have enough funds or their appetite was really big and their budgets were tied to cryptocurrency, which was growing, and then it was not. And so, the whole thing helped to clear out the system. The job helped to clear out the system of bad players, a number of players which were not adding value to the market. We'll see what the rest of 2019 and possibly 2020 will bring.
Yeah, absolutely. I think we'll probably start seeing what the market's intentions are very soon. In fact, I think, and not only with Bitcoin but with the altcoins, I think that within the next few weeks to a few months, we should set the tone on what's going to happen next. And I'm actually quite positive. I mean, just from a technical point of view, we definitely have ticked all the boxes to say it's a bull market, in my opinion. And whether it's a shorter bull market or a longer bull market, I don't know. But I think the only thing that would really seal it is if we had to break the all-time high. I mean, then you could, who could argue with you then? But everything else, we're above all major moving averages. We are above the 6K barrier that held up the whole of the 2018 market. We've created higher highs on all time frames now, including monthly. The only thing we haven't done is close a quarterly on a higher high, and we came very close to doing that in the last night, yesterday. We were only a couple $100 from closing above the all-time high close on a quarterly basis, 3-month candle basis. And I think we were about $200-300 off, which is incredible. I mean, if we had closed above that, it would have been a case of sell everything, mortgage the house, and buy Bitcoin.
Which is not a financial advice.
No, absolutely not. No, don't buy it. It's risky. And yeah. But I don't think a lot of people actually realize that if you pull up a chart with 3-month candles and you see how close we got to closing last night, a 3-month candle, that being to end of June. So it was basically April, May, June. That 3-month candle nearly closed above the all-time high of the 3-month candle that ended in December 2017. So, I mean, that would have settled for chain of events. I mean, you've got algorithms and bots and, all these automated trading systems that would have taken that as a huge buy signal. And, the market would have gone absolutely bananas, I think. But, so we should know within the next month or two. I mean, I wouldn't be surprised if we have a month or two's cool off. But, it's not a given. We could still go up from here. It wouldn't be shocking for Bitcoin to continue going All right, man. It's been awesome. I mean, we've covered a few things. We spoke about regulation, price, and all sorts of things. So I think everybody could get a good grasp on what we think about most of the aspects within the cryptocurrency space. Thank you, and thank you to everybody, and we'll see you next week.